Bitcoin was also affected by the CPI yesterday.
Okay.
Let's go to the 4 hours, a little bit cleaner. This was yesterday. This is what happened yesterday. We had opened from around 6,200 or 62,000, and then we went all the way up to the. Let me go to the beginning of this morning. Just around here, hitting the. Let me get it right. About right there. Hitting the high of 65,000. That happened from CPI as well. Just like I was saying, when people have to spend less on things that they need necessity-wise, then it becomes a place where you can then get into assets. Now, that could be riskier assets. That could be the strong haven assets, gold, whatever the case is. But in this case, it was Bitcoin. We gapped up and broke this level that we were sitting at. We're kind of dancing around it, but we did break this level, and we're staying above it. That's on the 4 hour. Let's see the daily. Okay, closed above it as well. Nice. Before we were sitting in this range here, doing a lot of dibble dabbing, touched multiple times, as well as rejected down here multiple times. Earlier in the last week, and now we are here. Really, there's not too much movement in the crypto market. It is getting to where closer to the altcoin season, man. I broke down crypto yesterday briefly for Tuesday Takedown. You got to go tweet into that if you didn't see it already. But yeah, we're for the past couple of weeks since June. This is the highest that we've been right here. Since June 15th was the highest that we've been for crypto. That was 68 or 66. So, am I thinking? Yeah, 60, about 67, 68, 68,000 per Bitcoin. Not too much movement, like I said. It's pretty stagnant, but even the risky assets get a little bit of love when it comes to the stock market, when it comes to the Wall Street dropping out their earnings and giving out reports. Everybody wins ultimately. You know what I'm saying? Oil even rose. That's like bad for us. But if you're a trader, right? There's nothing but opportunity in the market. Now this is. Let me see this move real quick. From the bottom of here all the way to the top, it's a 5% gain. On if you was long in the market, 5%, right? That does wonders for the account, as well as this being 3,000 points. It's a little bit different when you're a trader. That's crazy. 3,000 points on Bitcoin. That's something that's a good move. You got to have a little bit of money to trade Bitcoin, depending on what kind of count you get. But we're not getting into the semantics of trading. But yeah, man, everybody gets a piece of the action when it's time. You know what I'm saying? Risk assets doing their job. Bitcoin is still within the range here. Bitcoin's still within this range, man. If we get around this level, or if we get around this level, then it's gonna be a little more talk, because we're either gonna reject or we're gonna go straight through it and dibble dabble like we did right here at this prime level. And let me go to the 4 hour. Let me see it one more time. Yeah. Let me make a little line up here for the top. Let me go paint it yellow. We're gonna do it yellow because that's where we want price to go. And yeah, man, this is where we at. Bitcoin between this range here, it's about $10,000 difference. About 10,000.
67,000, 57,000,
Yep.
man. Let's see what Bitcoin does when we break out of 67,000, man.
If it does, man, this chart ain't looking the best, man. It's not looking. You see, we doing a whole lot of this. So we'll see, man. I see Bitcoin going a little bit lower. I see that we have this. Something is brewing for sure. The crypto market in the space, it's a lot going on. I think that it's giving volcano vibes, man. It's about to erupt in either direction.
Okay, man.
I don't think it's gonna blast off.
Yeah.
But it's definitely gonna spill. You feel me? Somebody's gonna either get hurt or somebody's gonna feel like a champion real soon. I think that, the summertime, just like you said a couple of weeks ago, man, it's the best time for the stock market. It's just the best time where money's made. Everybody's making money during the summer.
Yeah.
Summer has its best. The summer stretch is the best stretch of the year. We'll see if that happens, man.
Then we got the midterms coming up November. You know what I'm saying? I actually meant to. I forgot about that. But let's do it together now that we're here. I wanted to get data. Wanted to get the data of how the stock market operates historically during the midterm months.
Let's see.
So let's see what Google Gemini is clutch.
Historically, midterm election years are the weakest and most volatile period of the 4-year presidential cycle, but they are followed by one of the market's strongest historical buying windows ever. Data analyzed across 90 years plus of the S&P 500 shows a clear, repeatable pattern of anxiety turning into a major relief rally. Excuse me. The pre-election. Yeah, during the midterms, November, we know that toward the end of the year, the last quarter of the year, it's always shaky. Last summer or last winter, it was shaky. And then October came, crypto blew up. That was when we had our all-time highs. Bitcoin, XRP hit like $3. You know what I'm saying? Ethereum was all-time highs. The crypto market was booming, and so was the rest of the markets, man.
You guys see it here first, literally. The pre-election slump during the months leading up to the election, that stock market typically stalls or underperforms its long-term average due to legislative and regulatory uncertainty. The performance gap, the S&P 500 averages a modest 2.9% to 5.8% return during midterm years compared to its overall annual historically average of roughly 12.4%. High probability of correction. Out of the 17 midterm election cycles since 1957, the S&P 500 has experienced a market correction of 10+% 12 times, a drop of 10% plus 12 times, and entered a full bear market 6 times during these months. Summer and early autumn volatility markets return typically soften through August, and market returns soften during August and September as investors adjust portfolios, potential changes in congressional power. Right? Perfect. I'm glad that we went through this because now we can literally read this and we can have the beauty of knowing, hey, when this time comes around, we can expect us to drop. We may even get that 10% correction. Right, and hopefully we do, and it's gonna be different from the way we've been moving lately, right? And it's gonna make the show a little bit more interesting because we get to look at a down market because we've been feeling great. We've been feeling way too good for the last few months. You know what I'm saying?
We was hitting all-time highs in a war, so
we've been moving since March 2026, right? We have been moving and grooving. We was locked up and now we're moving and grooving. Yes. And definitely not a coincidence in my mind that this is happening right before midterm. We had our run up right before. So we had these moments where we were able to sit up here and laugh and, get to the upside, and Trump's been talking about this, and that. We've had those moments to take advantage of. And now we're going to get them red moments, which is not something to be afraid of, but it's something for us to be prepared for. So, whatever it is, whether you got 200, 500, 600, you want to save up, right? Whatever it is you got at that time, emphasize putting stuff in the market because followed by the anxiety leads to whatever it said, major relief, right? A repeatable pattern, right? The same way that it says midterm election years are the weakest and most volatile period, but it says it's followed by one of the strongest markets historically buying windows. I mean, hey, buy that dip.
No cap. I think this is going to be a real crazy rally because Trump is doing a lot of things before midterms. It's July. It's another 5 months until November. 4 months, 5 months until November. Man, he's already done so much since the beginning of this year. It's gonna be crazy. It's gonna be a time. It's gonna be a time to be alive, man. And just like Official Go Getter said, I hope you got some money put up, man, because it's gonna be red, and it is gonna be nothing but opportunity. You can't be scared of the red market. Actually, you should look. You flip your whole mindset when it comes to it. When it's red, that's when you're like, "Ooh, I'm glad it's red." When it's green, you want to be like, "Damn, nah."
Because man, I need to get some of that.
No cap.
Some I need, making sure the money's straight. You know what I'm saying? Even me, I got to make sure that I got the funds that I want to have so I can take advantage, because I'd be damned if this shit goes down and runs up without me. But then there's another thing. Before I say this point, which point do I want to make first? Okay, I'm gonna say this point first. We talking about buying the dip at the lows, right? For the people who are already invested, and let's say you might not have as much money as you want, or whatever reason is to buy the dip during those moments. Do not sell whatever you have.
Right.
That's just as important as buying the dip. I mean, you can only get those exponential returns, right, on crypto, stocks, Meta, Apple, whatever it is, unless you're holding, right? You can't get Nvidia at 250 when you got it at 90 unless you hold it from 90 to 100 to 135, back down to 90, back up to 150 to 200, and then 250, right? Same thing with the market, right? Do not sell if you buy here, right? Do not sell, or don't get up here. Don't get so happy when we get here and then we get back here and you want to sell your portfolio, right? When we go down, which is gonna happen, do not panic. It's gonna rise right back up. Do not get faked out of your position and put your shares on the market for somebody else to grab, because whoever's selling their shares, I'm gonna be the one grabbing them on the other side.
Quickly.
I
will say as well, and putting emphasis on what he was saying, the name of the game is longevity. You gotta be in the game long enough to even reap those benefits. So the perks about being in the game long enough is if you're dollar cost averaging, you're investing, you're doing what you're supposed to do, you could sell profits and take some profits while you're here, but you're not selling your whole bag. The point of dollar cost averaging is to get in the game. But the second point to that is getting enough to where you can take some money off the top. You're skimming off the top. You know what I'm saying? You're not selling your entire position. That's the craziest thing ever, especially in these types of markets. You want to get in the game so much and last in the game so long that you have the ability to take some off the top. And so when we do have that pullback and we get down to that 10, 20, whatever percent drop, you have more than enough to get back in, because you can take these profits. Say you don't even go splurge, right? You just got it sitting in your account. You're waiting for that pullback. That's another opportunity, because you got in at this low. You got in. Let me make it a little bit more visible. You got in at this low, benefited from up here. Price comes back down to this level here, right? That's not too far from here. So if you buy in here, price comes back up to this level, man, stay in the game long enough for you to get the benefits and reap the benefits of all your sacrifices. Because get in, stay in, be in long enough to reap those benefits, man.
Yeah, Flash made a great point. I'm glad he brought that up. That's literally rinse and repeat. And for the people who's able to grasp that, that's what you want to do. You want to invest. Like my biggest holding is Meta. We've talked about that, right? If Meta's the most that I got my money in, it's the most that makes me the money, right? Like Flash said, I don't want to sell my profits, and don't ever sell your profits to go buy no BS, right? You only want to sell your profits to go reinvest, right? You either take that profit, go put into another stock, or you put it right back into the stock at a better price to get more money. But the second we make that habit of selling the profits to go get BS, I don't want to make that. I don't want you to make that a habit, right? Because it's just don't make that a habit. Yeah. Saying that to say, man, that was such a good point Flash brought up, literally, man, because you can literally use your portfolio like a, what's the word that I want to use? cash machine ain't really what I want to use. But you can
leverage?
Like leverage. That's what I want to use. You can really utilize your portfolio as leverage when you get to that point, right? When you get to that point where your biggest holding or whatever holding that you're having, your market is your stocks are making you $200 in profit, and you say, hey, I want to take $100 to go invest into DRAM to invest more into that, or whatever it is to invest more than that. That was such a good point. Shout out to Flash for bringing that up, man, because those are the moves that you can make in the market. Rinse and repeat.
Yeah.
That's it.